All right, cool. Welcome back, everyone. My 6 subscribers to a video on trading. Just a disclaimer, this is not financial advice. Um, I'm not an advisor or anything. Everything that you do is to your own risk, blah, blah, blah. So I've been getting a lot of questions about trading and stuff, and beginners have been asking questions. What software to use? Actually, I wrote some notes here. The main question I get is this one, like what software you use, what it is. Also like what I look for. And I also think a lot of people don't ask this, but price action. Um, People don't ask this, but a lot of times like what am I looking for as a trader is answered by this. So I think this is a good opportunity to talk about everything. So I'll go down this list. Uh, so trading 101, this is not financial advice. So starting with the types of trading. I'd say first and foremost, there's like trading that isn't really done by humans, done by computers, and it's called high frequency trading and algorithms. Um, so these are little computers, making trades in milliseconds, very expensive, very cool, interesting stuff. And I think this is what is driving, if I'm not mistaken, pretty much like 99% of the volume of trades in the overall markets. It's completely dominated by high frequency traders and algorithms. And algorithms, like not all algorithms are buying and trading within seconds, but high frequency trading is that it's buying and selling within seconds. But I grouped these together because this is like the trading that has been developed by big companies, research companies, banks, and stuff. Um, that is essentially they're out to get us young bulls and bears on the retail side. Um, so you can create your own HFT or algorithm, but I will pretty much guarantee that it's going to be a really hard process. And if you are trying to mitigate risk and you don't want to be in crazy drawdowns and that kind of stuff, it's very hard and can be very expensive. Um, so next there is scalpers. And scalpers, I'm a scalper. These people are looking for short-term sort of movements in price. This can be like seconds to minutes. It's very rare that I'm in a trade for like an hour or two. I'd say that's like the max I'll be in a trade. Um, and so I like scalping because it is a good way to like make money in a short amount of time. I don't like to be in trades for a while because of my anxiety and brain. I like to lock in profits and get out, and I've noticed for my strategy that that works well. So that's that. Next, there are position traders, also like kind of, I guess, day traders. Keyword on day. These people are looking like to set themselves up. They might be looking at like the 30-minute chart or hour chart. And for them, like perfect entries are not as much of a, what is it, factor. Like they aren't too worried about that. Um, they may incorporate some like scalping related strategies to time their um, trade, but these people are looking to hold like for the day essentially. They might be in and out of trades in like 30 minutes plus, maybe even an hour plus. Maybe they enter a trade midday and hold it to close, that kind of a thing. So scalpers are in and out within minutes most of the time, seconds. and then these people are uh, a bit longer in their trades. Then you have swing traders. These people may hold for like days, weeks, months. And then you have long-term investors, and these are the people that hold 15 plus years. So like think about your grandpa and grandma and old people. If you are 20 and you're a long-term trader, um, grow some balls. Um, no, I'm just kidding. You can probably make a ton of money. And I'm sure a lot of people have made a lot of money with long-term swings as 20-year-olds. But I don't really like um, long-term trades because let's take AMD as an example. Um, you can be in a downtrend for fucking forever. And if you're short, it can be great. But also, like, if you're long, you might like see a double bottom here and think, "Oh, cool, I can buy here and it might be all good and cool." And then no, it just keeps going down as what happened to me. And then there's also stuff like earnings where they say, "Hey, earnings look pretty cool." And then the stock goes up 10% and then they're like, "Actually, never mind." And then it goes down 10%. So, yeah, like I could have sold here, but fuck you. So yeah, anyways, long-term swing. This isn't where I make a lot of money. I still trade this way sometimes, but most of my money is made here. Um, so that's the types of trading. Next, I'll talk about instruments you could trade. Um, let's start with stocks because I feel like that's the easiest. Within this, oops, there's large caps. So this is your Tesla, this is your Amazon, this is your cool Zuckerberg, cool stuff. Then you have like mid caps. This is like your Archer, I think it is. Wait, is it? Something like that? No, no, no. ACHR. ACHR. This is your I don't know, is Snapchat a mid cap? Maybe, maybe not. Those ones that are priced like under $50 a share with smaller market caps. Trying to think of another one that ran up like crazy. Oh, SoFi. Cool stuff. Then you have small caps. So these are your like penny stocks and like really tiny caps, large or sorry, small cap. I think the one that comes to mind is KULR. This one has had a pretty crazy swings. Um, and this is what I trade. I trade small caps. And the reason why is these ones are pretty much all dominated by HFTs. So these love each other. Um, and the reason for this has high liquidity, high volume. Um, your trades will not move the market if you're moving tens of millions of billions of dollars. This absorbs that because there's so many people that trade it, so many banks and whatnot. Um, and me as a scalper, yes, I can trade large caps, very cool, but I don't make a lot of money percentage wise because if Tesla goes down 10%, that is $30. Whereas if a small cap goes down 10%, that is 20 cents. And you'll notice a lot of small caps will go up 100%, 289%. And it's a easy, Jesus, fuck, I just had a stroke. It's in a lot, oh my God. It's, fuck, it's an easier way to make better percentage return on your profits. In my in my humble opinion, like yeah, you could trade futures and make crazy percentage in forex and options, but fuck all of that. Honestly, um, this is what works for me, so I'm gonna talk about it. So yeah, ignore these lines here, but let's say I'm like shorting here. If I short here and cover here, that's 15% on my position. Whereas if we look at Tesla, oh my God, I just burped. If we short here to here, that's 1%. So I prefer this because more percentage means more money, but with that comes higher risk because as this goes up from here to here, that's 20%. So I like small caps because they're more volatile percentage wise. Um, and that kind of volatility is good. The problem that comes with this is lower volume. Your fills aren't instant. The spread, oh, sorry, let me write this. Low volume. The spread, sometimes it can be like 10 cents or 15 cents. If you don't know what spread is between bid and ask, Google it. And then there's also, um, oh, I don't know what else. I guess those are the main things. Well, the thing is these guys here don't really trade them that much. I mean, maybe they do, but I don't think so personally. There is like, and this is kind of like a little side comment. There is manipulation that happens here, but I would say it's pretty easy to identify manipulation once I get into price action. But anyways, um, yeah, we don't really have as many algorithms and high frequency traders trading small caps because it's not as oh yeah, low volume. What I mean by this is like low liquidity. So if I own, hundreds of thousands of shares of this stock here, TIVC, um, I can't really unload those shares as easily as I could Tesla or Amazon because they have so many more shares being traded throughout the day. Um, anyways, so that's stocks and sort of how you could trade stocks. I guess I skipped, well, not really. We'll start with instruments and then dive a little deeper. There's also futures. A lot of day traders do this and then do like the prop firms, um, and uh, and do copy trading and um, it's good. Futures is good. I wish I sort of learned futures when I started my journey, but I was always attracted to just normal stocks. I might move to this in the future, who knows? I think it's a lot harder though because same thing is it can be dominated by algorithms and high frequency traders. Um, if you are looking to get started in trading, I would say like futures is a good place to start because you don't need as much money to do so. I literally saved up 30K so that I don't have to deal with pattern day trading rule. So I didn't really get to experiment with my strategy until I had like a big boy job, which isn't chill at all. So this is a good way to like do trading if you're broke. Um, yeah, futures. What else? I guess what else do people trade? I feel like that's pretty much it. If I include options. Options are cool, great, but they are risky. If you aren't a genius on everything options based, like, and by that I don't mean like you're a market wizard, but like you have to understand every little thing that goes into options pricing in order to profit on these. Yeah, you could YOLO it all on GME, um, but you could also set the money on fire or go to a casino. Um, this is how people make generational wealth because this is where you have your like 10,000% gains. Um, but this is also how people lose their entire life savings and they have their minus 100%. So high risk, high reward. Definitely like same as futures. If you don't have a lot of money, it's a good place where you can make money. But I will say this, that the options strategies that make money require a lot of money. So you're better off doing futures. Um, that covers that. So I'm a scalper and I trade small caps. So I start that's what I trade. My headset just disconnected. So now I'll talk about what I look for as a trader. Um, so this will kind of get into software I use. So I use Thinkorswim. I run my scanner. This is my scanner. There's a lot of free scanners for penny stocks everywhere on YouTube. Um, and you really don't need something that cool. But that's both of my scanners. I have them tagged to my watch list here, and then I have these mapped to my chart so I could just go through and filter through. So the good thing about Thinkorswim is it's free. I do know it's only available to US people, so if you're not in the US, good luck figuring that out. But yeah, I'm sure there's options out there. I know people use TradingView and whatnot. I use Thinkorswim for charting and stuff like that. So what I look for is once I have my little scanner here, is I look for RSI divergences. And basically what that is if we go to here, it's basically when price makes a higher high, but your oscillator, RSI, makes a lower low, a lower high. And I trade short, so I'm really looking at this regular divergence. And yeah, so if we see here, we had price make a high and RSI peaked, and then we have a higher high, and then RSI is lower. So this blue line here shows the trend. This is exactly what we have here, this bearish regular divergence. So what does that mean? It can mean that, hold on, I'm trying to show where it says it's a reversal. Whatever. It can mean reversal. And so yeah, and you see that's what happens here. So we have this higher high and then trend tends to reverse a little bit. So um there's also RSI convergence and stuff, like feel free to Google that if you're interested in that. But that's why, like, if I see stock in an uptrend like this, I might still be interested in shorting it because I see a divergence at this point. Um, so what I look for, one, divergence. And I'm a short seller, so I need to see the bearish divergence. Then two, um, I look for overextension. Um, if you're familiar with indicators like VWAP and Bollinger Bands and standard deviation, like average true range, um, if a stock is trading in the upper band or above the upper band of those sort of indicators, it can signal overextension. And then my favorite part about trading and what I found the best indicator is price action. Price action is the most important. Oh God, sorry I burped. Um, sorry, I skipped over the software I use. So I showed you my scans and what I use for charting. It's Thinkorswim. For trading, I use TradeZero, because Thinkorswim doesn't let you short everything. Um, and oh, for tracking my trades, I use trader view. So, um, a little bit about my journey here. I started trading. This only goes to November, but I honestly started trading in 2018, and I went through basically everything, all sorts of these strategies, and except I didn't do futures, which I kind of wish I tried at some point. I did everything but futures. Um, and I lost a lot of money with options. Probably like a couple of $1,000, but definitely made it back so far. But you'll see here, this is when I started practicing a penny stock strategy. And I was like doing it to the long side, and I was like, this is kind of trash. I'm not really doing well. I had that good week here, but then like gave some back and then had this losing week. And then I was like, you know what, I'm just gonna try shorting. Um, People say it's riskier, but maybe they're lying to me. And then this week I think I was still doing long strategy. I think maybe this week I did shorting. Um, yes, I did. I remember these stocks. Um, and then you'll see my P&L sort of started to look a lot better. And I was like, "Oh wow, cool. This is it. I'm gonna be a billionaire." And so I slowly scaled up. I was like, "You know what? I have such a high win rate here that I can, start scaling up." And then I lost it all. No, I'm just kidding. January was a really good month. Didn't have a single red day. Um, and yeah, starting to get more comfortable with this sort of strategy I'm talking about, and then almost got absolutely fucked. But we move forward. We're still green on the month, and we'll continue being green. Um, so I look for divergence. I look for overextension. There's plenty of indicators you guys can use or like Google to find these sort of opportunities. But price action, I don't think there is an indicator for. I mean, I'm sure there is, but I don't know how it can be used. What I look for in price action, and this will be the last thing I talk about. This can be a video by itself, but I will talk about it sort of in drawing terms, and then maybe do a live video of how I use price action in my trading. So first things first, I would educate yourself if you're not familiar with level 2, time and sales, and depth of market. Pause this video, go watch a YouTube video on these 3 things, and then come back because I won't go into it too much detail until I release sort of the live trading video. But why this is important is it can give a lot of information about places where price is um, of interest, let's say. It could be of buyer's interest or seller's interest. Oh, also, candlestick knowledge is really important, sort of what stuff means. I don't think that candlestick patterns are like horrible, like they are somewhat helpful. I would say that most of these patterns are dog shit, but they can work. Like if you see it work and it works for you, that's great. I don't think they work all the time. You could definitely, um, what is it? Develop a strategy just purely off of candlesticks, but I don't do that. I just use what a candlestick looks like um, to demonstrate strength versus resistance. So this is really good. Look at this. If you know anything about candlesticks, actually we'll start with this screenshot. So we've got the body and the wicks. And then at this wick high, you have the high. The for a green candle, the opening price is the lower one, the closing is the higher one, and then this lower wick you have the low. And these are the most bearish candles, and then these are the most bullish candles. So we go to our chart here, we'll see that whenever there's wicks that are bullish like this, what this singular wick is telling me is that price opened here, it drove all the way down to here from like point from 0.53 it went down 9% and then it bounced back up and closed green. I can be reasonably sure that the next candle might be green. Um, but you don't know. Same with here. Oh my gosh, price went down 8% and then it just shot back up. Oh, people are buying here. Oh, people are buying here. So you could keep these levels in mind. Oh, people are buying here. Oh, shoot, people are shorting here. Never mind. You could keep these levels in mind and look at these wicks to understand what's going on in the price. But I would say like more important than this is these three. So, um, assuming you know what all of these mean, let's say that I am watching a stock and it's going like this. Oh, and then right here it shoots down. I know that, and let's say like right here is $5 and then this high is $6. I know that at $6, it is a place of interest for sellers. Same thing here, same thing here, but the fact that price breaks through is less um bullish or bearish, I would say. If this shoots down a lot, I know that like okay, at this point we have sellers that are interested. And so the next time price goes up to there, I'll take a short and then watch it go down. And it can be like within seconds that I notice this, and that's why level 2 and time of sales are so important. It's because you could see it on there. You can see that once price, say, reaches $6, a bunch of red orders go on the bid, and then price shoots down 10, 20 cents. I know that the next time that it goes up there, I might want to look to short. Specifically, if these two indicators are met, these two parts of my strategy are met, I can reasonably say that, hey, if I see bearish price action, I should take a short. Same goes for the long side. I haven't tested it to the long side. The reason why I like the short side is because price tends to fall down faster than it goes up, and I don't like being in trades in a long time. Um, so yeah, now there's always the situation where like you have that same pattern and then it grinds higher. But remember this, what if there's a divergence? What if on this higher break, your oscillator, oops, that was horrible. Your oscillator looks like this. Then what? Well, this point is just another area of interest. This can be a place of reversal. So I will short here as well. So I look to see, I use price action, I would say, for my shorter term trades. But if I'm looking for my A plus setup, it has to include these two things here. Um, Easier to sort of draw an MS Paint than um, do live, I would say. Like sometimes you can't get the shares in time or it's too expensive or you can't get the shares at all to short. Sometimes it's not exactly your strategy, but it's close. That's why it's like very important to have like a list of criteria that is like your perfect strategy. And then the more checks you have, the better you might want to like adjust how much you allocate to that trade. If If it meets 3 out of 3 of my criteria, I will probably go in with my starter position size. But if it meets 2 out of 3, I might do a little bit of this action here and maybe go with 2/3 of my position size. So super important. Also, like I'd say in these kind of situations, I take profits earlier because it's not perfect. I will hold on to this if it's working in my favor more often. Um, so this stuff is very important, I would say, if you're a scalp trader. Um, there is like a lot else you could do, but this is what I do and what works for me. And I will be releasing like a price action live video. I have another video on my channel where I trade live, but I think talking about it more in detail can help because I know a lot of people just don't use it. So, yeah, thanks for watching. Stay subbed for that price action video. And I hope this answers a lot of beginner questions.